We're basically an algorithm. We're basically market makers, just scalping little bits, taking a lot of trades every day, in and out quick. It's a pretty, legit strategy, but it's not for everyone.
Why do you say that?
Uh,
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be the Trader. Today is going to be a fun day because we have the laptops out and we're going to be diving deep into a strategy. I know that's what all of you guys always want to talk about and want us to bring to the show. So I got Caleb here, who's also AKA known as the trading farmer and a scalper, which is something I'm very interested in learning more about. So Caleb, go ahead and explain.
Yeah, so I'm a scalper like anybody else, but I'm a hyper scalper. So I'm taking a lot of trades every day, in and out quick, like playing Call of Duty. And so this is different than even what you guys do, which is like, slow pace, a lot key levels.
Make
like
you
each,
old.
yeah, it's slower pace, okay.
Yeah.
And so I'm really quick with the low float stocks. They're small cap companies that have news. Call them the gappers. And so it's a really fast paced thing. We talked about it a little bit in the last interview, and it's growing in popularity with the free commissions. So it's a pretty legit strategy, but it's not for everybody.
Why do you say that?
Well, it's just like, video games is not for everybody. Some people, don't like fast pace, say like Call of Duty. You got to have the reaction speed where milliseconds matter, right? Versus a strategy, maybe you swing a trade overnight. You have time to set your levels, your stops, and you're checking on it at lunch, and then you're checking out at 1. So, and I don't know anything about trading like that.
Yeah.
What I like is just getting into a trade for a second, 2 seconds, catch a little profit, get out, get back in. And if it doesn't go green on me right away, I'm out. So I'm taking it's kind of an inefficient way to trade, but very consistent if you can dial in, your entries and dial in the psychology, the ebb and flow. I mean, it gets so freaking complex. Like, and I don't want to go down the wormhole. But yeah, we have this trade that I was going to show, but it's not even a full picture of what the strategy is. So I just want to make that clear.
Yeah, no, you're fine. What I'm curious though about is what are the key principles of this type of trade? Like, what do you look for? I know you mentioned news,
Right.
gapper. Is there a certain percentage? Is there a certain type of volume? Is that even specific on you?
I'm more of an arts guy. So
Okay.
as far as it comes to these select parameters, I have some, but they're pretty loose. So yes, low float, below 30 million, 40. Some days I say 50 million, but that's pretty cut off. I don't go to the 100 million. I don't go to the 200 million. If I do, it's a slow day and small float, and maybe I'll go. So it's the low floats and stocks with volume. And that comes with the news. That comes with the fact that they're gappers. Everybody's watching them.
They have to have news.
Yeah. They don't have to have news. They have to have, I guess, volume, high relative volume, interest. Okay. Most of the time, yes, it's news. It's news. But sometimes it's a daily chart runner where it's a daily chart setup and it's like third day, continuation. That's the catalyst. So you need a reason for it to move. We're not just going out to random penny stocks and saying, let's run this up. It's nothing like that. We're trading what's hot, what's moving, what has fluctuations in the price quick. So I don't know if that helps.
No, it does.
Like narrow in a little bit of like what I'm doing.
What you're trying to like scan for and look for. That makes sense. So every day you come fresh and just scan and attack that, or do you always look at the previous day, or how do you?
No, I'm real chill about it. We have the gap scanner every day. Shows us the stocks that have moved up the most, and they're usually crap companies.
Yeah.
And the key thing with these crap companies with volume is they're volatile. They move fast, up and down. And the simple thing that I do is get in and out on those fluctuations. Just this dip, on down to the 1 minute chart, maybe the 5 minute chart to look at big picture. But say, for example, it's a breakout. I'm not just going to buy and then just let it run forever. I'm going to buy, let it pop, sell. It quick drops in price, maybe 20 cents, and then teleports back up 40. Because the price never just goes straight up. It always has, that pop, 10 cents up, then 5 cents down. You think it's done, but then it shoots up 20 cents. And it's like these waves, these oscillations down to the micro within, their seconds.
Mm-hmm.
Seconds. And so when there's high volume, we can do it a lot. Now today, we traded here in the house, and it was a lower volume day, so we had to spend more time looking for patterns on the 1 minute, such as 2-bar pullbacks, 3-bar pullbacks, ABCDs. Otherwise, there just wasn't enough juice to just get in and out all the time. You had to be a little bit more selective. So it's not just like we're clicking in and out randomly. Okay, you have to put thought into it, and that's where that's the difficulty. It's a simple freaking strategy, and I don't want to say it's easy, but it's a simple freaking strategy. I've seen so many other people do it, and they're picking it up quickly.
I want to take a couple of seconds to say thank you to our sponsor, Cobra Trading. Cobra Trading is the go-to broker for short sellers, and I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. And Forbes Advisor did an exhaustive research on day trading brokers, and Cobra Trading was the only broker awarded in 2 categories, one of them being customer service. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. Look, I've experienced many different brokers, and it's why I choose to use them every single day, and I'm proud to have them as our sponsor. Sign up now by using the link below, and Cobra Trading will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. Now let's get back to the show.
Thanks to free commissions, one, to allow us to take 400 trades in a day and pay 0 commission, our margins are like a penny per share. When you calculate all the shares we trade, we're getting a penny, usually, from all the people that I've seen do this, including myself. It's a penny per share. We're basically an algorithm. We're basically market makers, just scalping little bits. Sometimes we hit a bigger trade. And as you get better, I've evolved from that to where, now I'm starting to look at the bigger picture, because that's how I can survive slower markets. So, I've adapted and added stuff.
Yeah.
But, the basics is just that in and out market orders.
Because you're in and out so quickly, and because it's key to your strategy, are you just staring at time and sales level 2? Like, what are you staring? Like, what are you focused on when you are looking at your screen?
I like to explain it. It's 3 things. We got the chart, we got the price ladder, we got the time and sales. Okay. I always start with the chart, and that's just like, that's the price action. That's going to show us the gapper. That's going to show us the pullbacks. That's going to show us where we want to be getting aggressive and getting in and out, and where we want to dial back. Maybe if it's a huge topping tail. So it starts with the chart. The second importance is the price ladder, because once I identify the opportunity, once I identify a pattern, maybe a 5-minute breakout, I'm going to say, okay, this is a zone where buyers are going to be hopefully aggressive. And that way, these fluctuations, although it dips quick, I'm expecting it to rebound quickly, and I just catch those quick pops. And the time and sales is not something I stare at. Corner of the eye. Okay, so it all comes together where, yes, when I'm in a trade, I'm staring at that level 2, because each trade, couple seconds, I am very sensitive to little data. Big seller pops up, out. Big bid comes in, right up.
And you don't care to validate if it's real or not, you just out.
Well, with these, there's just no time.
Gotcha.
You got to pull the freaking trigger on these things, because they're so quick. And coming back to your previous question, like, is this for everybody? No, because it's like milliseconds between you making a lot of money that day or, losing. And it's just, for example, I'm teaching my dad to trade.
Yeah.
He's 60 years old. Okay. He never played Call of Duty. He never played video games.
Right.
Okay. He's a little slow. And when you're trading with a platform, the free platform, there is lag on top of that. And you have to adjust to that lag. You got to buy, if you're buying a quick dip, you sometimes got to punch the button before you really see it bottom out, anticipating the lag. And that's where, like I talk about getting better, that's where I've gotten better, where people complain about Thinkorswim, and I get it. It sucks in some ways, but I love it because it's the tool I use to make a living. I've learned to work with the drawbacks of the platform. And this is a side tangent, but anyways. Yeah.
No, you're fine. What I'm curious about is, let's go ahead and dive into this chart here.
Yeah.
Right? This is a live trade recording that you did here, right? So I'd love to hear what you have to share about this.
Yeah, so I just wanted to pull up a quick example. In no way does it totally show the full strategy, but highlighting the use of market orders, okay? Buying a dip, in this case, it falls below ascending support. I see red on the tape. And this is a stock that a lot of people were short on. And it was looking shaky all morning, but every time it would drop and look like it's done, and it's like, oh, this is it, it's going to, boom, bid would come in, price would shoot back up quicker than you would think, and it would catch me off guard. So I was thinking that this was a short squeeze potential because I knew somebody else actually in the house here was short on it. And so I was like, I'm always looking for who's in pain.
Yep.
All right. And this is big, this might be too nerdy for most people, but that was the basis. I want to find a stock that's continually dropping and coming back over and over again. In this case, that was JTI today. Here's the video here. I'm down $2,000 on it. So it's a little embarrassing showing this, but this was
trade live often, like every day.
Yeah, I trade live every day.
Yeah. So I mean,
I'm used to sucking, on trading. So,
but it's the reality. Like you don't win constantly. It's the reality. Like it's just the reality of trading.
Well, yeah, I'm a trader, so yeah, I don't know any trader that wins every time. Yeah. But you can get pretty close if you're good. But JTI, this was a stock. I'll play it here. In this case, we got a stock that likes to drop. There's the drop through ascending support. And I didn't jump in it right away. And you can see I missed the best entry. But all of a sudden what happens is that price starts to rebound. Mm-hmm. That's when I quickly, knowing that this stock likes to come back, knowing the rhythm of the ticker, not just the pattern. The chart, that's the thing. The candlesticks are the candlesticks. But there was a rhythm to this. I get in 2 clicks in, 5,000 shares, mark it in. I ride it for what? 10 seconds?
Yeah.
Pulled out $1,300 out of it. Yep. Okay. And then I shut down because I was lucky to be green. I was trading at home. But that's it in a nutshell. That's to highlight the speed at which we trade. Really that's even a slower trade. And like I was talking about how we have to trade bigger patterns when things slow down and get choppy, which was today for me. This was one trade where, the short sellers thought they had it and they're like, this is it. And the same thing happened. It sits there and all of a sudden price rebounds with velocity. And next thing you know, those short sellers are stopping out, presumably, as well as other buyers, me, who whatever other scallywag is out there trading this garbage. And it will shoot. And we also got the pre-market high there. Okay, and this is a quick thing I want to say. That's also what is giving me an idea that this is going to want to push that key level. Because what it would do is it would put up a top of a tippy top pivot, top of a mountain, come down, chop around. You think it's done, but not JTI. And that was a rhythm that was apparent it took a while, maybe an hour to 2 hours in. We're like, this thing is not dropping.
Yep.
It looks like it's done, but it curls back to the previous pivot, sits there a little bit. The shorts have their stop right on the other side of that top. And this is the day it worked. Yep. This is the day it was working well. It doesn't always work, and that's why there's short sellers. But this was a day that I recognized this stock liked to drop and come back quickly.
So it's very important, and what people need to understand is that you were eyeballing this stock for a while. It was a little slower day for you. And so therefore you saw a pattern within how it reacts and how it has like a personality. And so you wanted to play off of that personality within your own strategy. Is that kind of right?
No, yeah, that's totally right.
Okay.
And it's a simplification, but it's something that will make sense to people. It's they're so unpredictable, these stocks, and every day is a new puzzle to solve. And as you trade over time, you start to get a feel for what type of stock it is. And that's what you add into the strategy, which is hyper-scalping. A lot of trades, buy the dip, use market orders, stay quick.
Yep.
And if you buy a dip and it's not popping within the next half second, just get out. And if it drops again, buy that dip. You can't do that randomly. And that's
I was about to say, because you did it at an ascending move here, right? But are you always playing at key support and resistance levels? Is that key to that strategy as well?
Yes,
key breakouts and only at
not
those
as
levels?
much as other strategies that maybe use a stop loss or set price targets where they sit there, put their order and wait. This is much more hands-on, where I'm just catching the fluctuations freehand. No stops, just I want to get in, get the quick money, get out, hopefully be able to repeat that process over and over. And some days you can repeat that process as simple as price. You get a stock that runs all day long, it doesn't just go straight up. You get the pullbacks, you'll get, even on the breakouts, you get those quick dips that just teleport right back up. And that's how you can avoid I guess that's how you can lock in profits, kind of like a ratchet. You're just little wins. You're just, instead of going for a big swing, which sometimes gets the job done faster, the ratchet, you're slow and controlled. Your losses have to be tight. They will be tight if you're quick with just cutting. Every trade's like, what, less than some of them are less than a second. So it's like, what I tell people, I give them the 3 second or less rule. I say no trade. You can't hold a trade any longer than 3 seconds, just to kind of highlight the speed of it. But the key levels, like we talked about, the pre-market level, I'll use that in my analysis, just like any other trader.
Yeah.
But not in the sense of, I'm putting my order up there, but I will play off the level to say, hey, it's curling. I think the key level is pre-market high or the top of the previous pivot. I'm expecting hopefully a pop through it, and I'll catch that pop through it. All freehand, all market orders.
And if it keeps going though, you'll keep playing that.
Yeah, I usually, once it breaks through what I call the apex point and pops through that, that's when I usually become more careful. Because that's usually what you get. You get the pullback, and then you get the buyers coming back in after the, whatever bottoming tail starts to curl. Their target, break that apex point. And to me, once they break it, that's the win. That's the success. Now, a lot of people say, well, breaks the apex point, catch the breakout. With these low floats, a lot of times they break that apex and they drop. So this comes back to, it depends on the day, depends on the stock. Sometimes it pops through and it dips, and I want to get right in on that first dip, because then the next one is that parabolic pop as people stop out or whatever, the ask disappears.
Yep.
But that does come back down to, depends on the week. Last week was slow, Friday was slow, Monday was slow. So I came into Tuesday with that idea that just wasn't the day, and it wasn't. We were getting the pops on JTI, but it was very shaky. Then it would flush really hard, right? We thought it was done. We're like, oh, it's done. 9 times out of 10, these stocks are done. But then it just kept grinding back. It was tricky price action.
Yep.
But there was, man, it really took off. And it actually, what I would call like kind of a mini short squeeze in a way, where it was like, I didn't think it was going to do it. But then after a while, I was like, I think it's going to do it. And it did it.
And it did. Yeah.
And I didn't catch it. But
what I'm curious about, man, before we start to wrap this up, because I know people are going to want to learn more about you, but I want to know, is there any cautions you would give to anyone who is looking at, maybe trying to scalp and just within the same second, like any caution at all, like warnings or anything?
Any caution?
Just curious. I don't know
about day trading to the average person.
Yeah.
You would think it would be inherent, but yeah, it's definitely,
because you have to be quick. Because if you're not quick, I mean, these small caps can pull back like dramatic.
Yeah,
especially if you're scalping.
Yeah, you get stuck in a halt down, and it opens. You lose half your investment within 10 minutes. That's an extreme case, but it can happen with these suckers.
Yep.
And so yeah, it's incredibly risky, and that's why the caution is to start slow. Start what I would say in a simulator, or using real money but small size. We're talking like 25 shares, no more. And most people have the discipline to do that. Some won't. So there's some people that you seriously need to stay away, because if you're a degenerate gambler, like I've seen so many come and go. It's a fast rise and a fast fall, and it sucks to see the fall. It actually weighs on people, because people have killed themselves over trading, and it's the emotional toll this career puts a trader through, even successful traders. It's something that we talk about, but I think has a greater impact on some traders than others, but it can be a very negative force in your life. You take some big losses, which does happen. So you got to go slow. You got to start in a simulator. You got to prove that you're actually passionate about it. And that starts with going to boot camp, which is simulator in small size. Try to make $1 a day.
Yep.
If you can't even make $1 a day consistently, don't put your retirement funds up to go for this, because it's hard. It's doable, but it's hard. We're not, I don't hide that. It's for these people that are ambitious, that want to fight, and they're going to fight. They're going to fight harder than they probably want to. But if you're passionate about it, then, it's a great thing to get into. Go slow. Don't be dumb. It's the same stuff. It's like,
but you know what, man? Look, I know people are going to want to learn more. They're going to definitely want to learn more. So where can they learn more about you?
The Trading Farmer on YouTube is the best place to go. To the Trading Farmer. I trade live. Of course, We have, disclaimers. You can't copy what I'm doing. Okay.
Yeah.
So another caution, like you can't, and I'm being serious. You can't copy. And we say that right on the front. You can't copy. What you can see is try to get a feel for what I'm doing. So the next day you can come in and try to replicate that. And it's easier said than done.
Yeah, it definitely is. Well, look, man, I appreciate being here today and sharing a lot of that knowledge with everyone. And again, thank you for watching the show, and make sure to share with another trading friend. Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.